Good afternoon, everyone, and thank you for joining today's employer education session focused on contributions, earnings, and pension adjustments. Today's webinar is scheduled for a half an hour. My name is Sandy Cook, and I'm one of the managers in Employer Services. This webinar is part of our ongoing employer education program, which plays a vital role in helping to manage risk to the plan. The objective of today's presentation is to review the information and tools that you may use on a daily basis in order to calculate and report earnings, contributions, and pension adjustments. Linda McGuire, Employer Initiatives Lead, will be presenting with me today. Joyce Zhang and Anna Gurdon, who are team leads in Employer Services, are also with us today to answer any questions you may have. Now I'll turn it over to Linda to begin today's session.
Thank you, Sandy. Before we start by looking at earnings and contributions, I want to mention that we have employers with us today using two different methods to send data to CAT. Most of you are using our classic payroll-based reporting method, or PBR, which uses Excel load files. And we also have some employers who are newer to CAT who are using our automated data exchange, or ADE for short, which uses SFTP or API integration to flow data to CAT. Most of today's session is relevant to employers using either method, but Sandy and I will mention when the information is applicable only to PBR or only to ADE. Let's move on to earnings and contributions. The topic is relevant to all employers. The calculation of a DBplus pension includes eligible earnings as one of the elements in the pension formula. So exactly what is included in eligible earnings? Here are a few examples of various types of earnings that are categorized as eligible for the purpose of calculating member and employer contributions, such as regular salary, overtime pay, statutory holiday pay, bonuses, and vacation pay. Some examples of non-eligible earnings include gratuities, membership fees, mileage allowance, retirement allowance, and all taxable benefits, including life insurance. Please note that this is the standard DBplus definition of earnings, and your participation agreement may contain a different definition, so it's important to be familiar with that agreement. Note that taxable benefits are not eligible earnings, as mentioned before. If you have any type of earnings that are not shown here, please contact your employer pension analyst, and they can help confirm if those earnings are eligible or non-eligible. When calculating DBplus contributions, there is an annual maximum. The combined total of member and employer contributions cannot exceed the year's money purchase limit, or MP limit. The MP limit for 2025 is $33,810. The 2026 limit was released last week and will be $35,390. Our rates at a glance page on our website will be updated later this month, and PAL will be updated as well with this rate, and will be ready for when you report member events next year. Once total contributions for a member have reached the annual limit, no further contribution should be made for the rest of the year. This is similar to the method used for Canada Pension Plan contributions. This also aligns with the plan text and any applicable participation agreements. The member and employer contribution rates are included in the exhibits of your participation agreement. Depending on your agreement, the member contribution rate may be the same as the employer rate, or it may be different. The contribution calculation formula for DBplus is eligible earnings multiplied by the member contribution rate plus eligible earnings multiplied by the employer contribution rate. And as I mentioned, the contribution maximum is determined annually by Canada Revenue Agency. Here's an example of how to calculate contribution amounts. In this example, let's assume that David has eligible earnings of $10,000 each month. The member contribution rate is 6% in this case, with a matching 6% employer contribution. You can see that David's monthly contribution would be $600, with the employer contributing $600 also. In this example, the monthly remittance for David would be $1,200. If in the following months, David's earnings change his contributions would also change. David's contributions don't reach the annual maximum contribution limit, but if you have high earners who reach the maximum within the year, you would stop deducting contributions for the member for the remainder of the year. In the next section, we'll cover the contribution remittance process. One of the most important responsibilities of CAT participating employers is the timely collection and remittance of both member and employer contributions. Contributions are remitted to CAT's custodian, CIBC Mellon. When contribution data and funds are submitted accurately and on schedule, CAT can properly calculate and report members' accrued pension amounts, ensuring that they receive the lifetime pension that they've earned. To ensure that CIBC Mellon can identify your payment and the correct contribution data is reflected in CAT's systems, each remittance requires 2 steps: the actual remittance of the funds and a record-keeping process to identify the total member and employer contribution amounts, the applicable reporting period that the contributions relate to, and the date the amount is remitted to CIBC Mellon. This process differs between classic PBR and employers that have ADE. A classic PBR employer will determine the amount to remit based on the contribution calculations reflected in their payroll files, then select a remittance option. We'll cover those options in a bit later. And then send the funds to CIBC Mellon. For record keeping, they will need to create a contribution remittance summary in the employer portal pension administration link, or PAL. We'll discuss this a bit later in the session. In contrast, ADE employers will receive an automated invoice from CAT that is based on the flow of data CAT receives on a regular basis. Then each employer will select a remittance option and send the funds to CIBC Mellon. However, ADE employers don't need to create a contribution remittance summary because the invoice has all the necessary information. Next, let's look at timing. Employers can remit contributions based on their payroll schedule. However, contribution remittances cannot be less frequent than monthly. Monthly is the minimum, but you can remit more often. Contributions are based on pensionable earnings and are due to be received by CAT on or before the 30th calendar day following the end of the month to which the contributions relate. That means, for example, that contributions for the month of October 2025 would normally be due to be received by November 30th. However, if the 30th day is a weekend or a holiday, the due date moves to the closest previous business day. So since November 30th is a Sunday, October contributions are due on November 28th. For easy reference, the employer manual contains a list of the due dates by month. Although the schedule currently shows only up to December, it will be updated with 2026 dates very soon. Note that contribution remittances received after the due date are subject to a late payment charge. Late fees are determined at a rate of 1.5% of the total contributions for each full month or prorated for partial months. You can choose to remit contributions before the due date if you wish. Remitted amounts can be grouped into 2 main categories. First of all, payroll contributions. These represent the ongoing member and employer contributions based on the contribution rates outlined in your participation agreement. And then we have remittances for pension purchases. These are separate from required contributions and relate to pension purchases such as leaves of absence. Currently, there are 2 main methods available for you to submit contributions. CAT provides the option to remit using online biller pay. This is similar to how you might pay your household bills online, such as credit cards, but in this case, the payee is CAT. Biller pay is available with CIBC, TD Bank, RBC, BMO, National Bank, and Scotiabank. The other method is an electronic fund transfer, or EFT. This allows for a direct transfer between the employer account and CAT's account. Wire transfer is an alternative method that is available, but it should be noted that a fee applies to each payment that's made. This fee is typically $15 per remittance, and your bank may charge additional fees. If you need instructions for a wire transfer, please contact your employer pension analyst. When using online biller pay, it's important to note these important points. When searching for the payee name, enter CAT, and it should provide you with the selection of CAT pension plan -employers. Be careful because there is also CAT pension plan -members. Make sure it says employers. The account number you would use would be your employer group number with leading zeros to make 10 digits. For example, if your employer group number is 500, you would enter 7 zeros, then 500, so the total number of digits is 10. When using electronic funds transfer, here is the information required to set up an EFT with your financial institution. Please do not send personal e-transfers to CAT, as this is not an accepted method for payment. This slide and the next two are only for PBR employers, but ADE employers will see how their invoice process accomplishes the same objectives for regular contributions, and a contribution remittance summary is required for pension purchases for all DBplus employers. To create and submit a contribution remittance summary, you'll need first to log into the employer portal, PAL. You'll find contribution remittance in the left menu under payroll. While we're not going to go through step by step today, if you would like to review a training session about contribution remittances using PAL, we've provided the links to the PDF of the slides and the full PowerPoint file with speaker notes. There's no recording at this time, but we will update the employer section of the website as soon as that is available. Here's a look at the contribution remittance page of PAL. Employers using PBR can conveniently submit their payroll files and create a contribution remittance summary in PAL with the same timing as submitting their contribution payments. Note that the screen has two options under Start a Remittance Submission, then some information about the annual reconciliation and a remittance history table at the bottom. If you want to create a contribution remittance summary before you have submitted your payroll file, or if you are still correcting errors in it, so it's not 100% posted yet, you can choose the Unreported Pay Period button. But if you have already submitted and fully posted the payroll file for the period that the contributions relate to, you can choose Reported Pay Period, and then on the next screen, select the pay period from a list. The contribution amounts will then be pre-populated based on your PBR record for that period, saving you some time. Most employers prefer this method because it has fewer steps, but there may be times when you need to use the first button of Unreported Pay Period in order to meet the deadline for contribution remittance. Sometimes we're asked, which should come first, the actual funds payment or the reporting of the payment? Ideally, you should submit your summary at roughly the same time as you remit the funds for a payroll period to CIBC Mellon. Some employers will remit the funds first and then create and submit the contribution remittance summary, while others will do the reverse. The steps should be as close together as possible, but keep in mind that creating the summary requires you to document the exact date that the funds are remitted to CIBC Mellon. So if you create the summary first and then enter a future date for remitting the funds, and then you actually remit the funds later than you anticipated, you will need to go back and revise your contribution remittance summary with the correct date. If you find an error on your remittance summary, there are a couple of ways to correct it. On the contribution remittance screen in the remittance history table, you can find the remittance summary record that you just submitted. Check the payment status to see if you can edit it. If the payment status says pending, click the record to open it and check the box that says, "Are you reporting a data change?" Then make your changes and resubmit it. If the payment status says payment received, you can no longer revise the remittance summary. Instead, select Unreported Pay Period and manually enter the corrected data. The later summary will override the earlier one for the same period. To correct an error in the amount remitted, you can choose to remit more or less on the next remittance. The second part of the remittance process is about contribution remittances related to a pension purchase. This is also completed through PAL, and this applies to employers using ADE as well as PBR. After you check the box for purchases, which is not shown here, you'll see this section appear. On this section, you'll need to enter the member ID by searching for it by clicking the magnifying glass icon. Then select the purchase type from the drop-down. In this example, the member is making a purchase in respect of employment before they enrolled in the plan. Then include the amount being paid and add comments if you wish. To add a purchase for another member, click the blue New Entry button. Note that if you're using PBR, you have the option to combine a remittance for purchase with your regular contribution remittance, but you can also submit a remittance for a purchase all by itself. Keep in mind that you should not report multiple purchases together. Each pension purchase amount needs to be reported separately for the specific period being purchased and for the individual member making the purchase. This allows for accurate record keeping so that the member's record is updated appropriately and they get credit for the purchase. For employers using PBR and for ADE employers reporting purchases, we can't stress enough the importance of a contribution remittance summary. Funds can be deposited and allocated only after a contribution remittance summary has been submitted using PAL and the funds have been received by CIBC Mellon. Delays in receiving the remittances affect many aspects of the business. Missing remittance summaries could also lead to late fees and additional back and forth communication. A contribution remittance summary must be submitted in PAL with every payment made. Please ensure the payment date and the amount of the remittance match what was sent to CIBC Mellon. As a reminder, slide 17 in this deck includes a link to a step-by-step review of the contribution remittance process. You can download the presentation from the handouts section in the control panel.
So now we'll discuss pension adjustments. This section is applicable to all DBplus employers. So a pension adjustment, or PA, is an amount that reduces the Registered Retirement Savings Plan, or RRSP, contribution room for members in a registered pension plan, such as the CAT pension plan, and is reported annually on the member's T4 slip. Employers must also report pension adjustments to CAT. The pension adjustment calculation is based on the sum of member and employer contributions multiplied by the pension factor of 9.5% multiplied by 9 minus the offset. The $600 offset is prorated by the total member and employer contributions divided by the money purchase limit for that year. Let's go through an example for Jill. Assuming Jill has eligible 2025 earnings of $100,000 with a member contribution rate of 4% and an employer contribution rate of 8%, Jill will have contributed $4,000 to the plan while her employer contributed another $8,000. This would produce a total 2025 contribution of $12,000. Using the pension adjustment formula shown here, we're able to calculate Jill's 2025 pension adjustment of $10,047. Note that a pension adjustment is always rounded to the nearest dollar. If you're using PBR, this is how you would report this on a PBR file. In Jill's record, enter $10,047 in the column with the header D2PA, and also enter 12/31/2025 in the column with header D2PA year. Employers using ADE will have mapped their data feed for pension adjustments, so when they're calculated, the data will be fed automatically to CAT. To help you calculate pension adjustments, we provide a DBplus batch PA calculation spreadsheet. It's located in the employer manual in the calculators and tools section. And here is a sample of the DBplus batch PA calculation spreadsheet. You'll find this useful when you're calculating your 2025 pension adjustments and preparing your T4 slips. At the top of the page, enter the pension adjustment year, then enter the member's ID, name, and the total member and employer contributions for the year. The tool will then calculate the pension adjustment amount. The spreadsheet will be updated for 2026 in the coming weeks and should be used for any retirements or terminations that occur in January 2026 onwards. Do we have any questions?
Okay, so we do have one question. So this one is asking if an employee purchases contributions from a previous year after they return to work, so for example, a pregnancy or parental leave, is it reported all in the same year the member returns to work? Joyce, do you want to take this one?
Okay, I think this depends on whether the member returns to work within 6 months or not, right?
Actually, there's a follow-up item, and it's suggesting that this would be for after 18 months. So if somebody went on an 18-month parental or pregnancy leave.
Okay, so the member comes back and then make the purchase of the mat leaves.
Correct.
Okay, so the process is the purchase form will be completed with the help with the employer, and then they will send to us. Our purchasing team will receive a task, and then we'll be expecting the contribution, the payment sent to CAT. And because it's a mat leaves, it can be paid through cash for the employee portion. Did I answer the question?
And reporting it on the T4.
So the T4 is because on the form, the employer will be asked to enter whether you have calculated the PA or not, right? So on the form for the current year, 2025, the employer's responsibility to calculate the pension adjustment. But for the prior years, our purchasing team will calculate the PSPA and send to CRA for approval. So the employer's responsibility is only for the current year PA calculation, because that will be also on the member's annual T4. Does that answer the question?
Yep.
And also, sorry, I forgot to mention, also there's a timing issue. So whether it's before or after April 30th of the year.
Okay.
So if you have any further questions, please email your pension analyst, and then we will take this offline. We will reach out to you.
Okay, so we have a question regarding pension adjustments. So when is the pension adjustment reporting due for the year end 2025?
I would like to say by the end of February. I think usually most of the organizations, they would complete all their T4 filing with CRA by end of February, my understanding. So honestly, at CAT, we don't have a hard deadline. So once you have all the data up to the last pay in the prior year, 2025, please just calculate the pension adjustment and report it to CAT.
Great. And we have a question that I think you just answered, but is the PA amount the same amount that would need to be inputted into the payroll for employees T4, which is yes?
Yes, and then I want to point it out, also depends. Some of our employers, they joined the CAT in the middle of the year, right? In that situation, that I'm not sure that member may have a prior plan, and that prior plan also has a PA, right? So on the member's T4, you will need to combine all the applicable PAs. But in that situation, the PA number on the member's T4 won't be the same as the PA you report to CAT.
That's a great point. And we have one more question. If an employee's salary reaches the maximum money purchase limit, will contributions be automatically stopped by CAT, or is the onus on the employer to stop remitting contributions? It gets tricky when an employee has another part-time job which also participates in a CAT plan. What happens if an over-contribution occurs?
This is a good question. I want to make it clear that in our system, we do have validations in place to flag this. So if under the members record, if the total contributions reach the limit for that year, the system won't let it, we won't accept the additional data contributions reported to CAT. So yeah, but in the meantime, I would also recommend the employers on your side, you should also flag those, especially the high earners, to keep an eye on that. But I can guarantee for sure in our system, we do have the validation in place.
Great. Okay, that is actually the last written question, and we do not have any hands raised. So I'm going to hand it back to Sandy.
Okay, thank you, Deepak. So this concludes our presentation for today. And this is our final employer education session for 2025. Our next employer education session will be on January the 13th, and we'll provide information on submitting your final payroll file and pension adjustments for 2025. An invitation to this session will be sent out in the December employer news with an emailed invitation in early January. So again, I'd like to thank everybody for attending today, and great questions. We appreciate your questions so much. So thank you for that. And then when you leave today's meeting, as usual, you will have an opportunity to complete a brief survey. And we'd really appreciate you taking the time to complete that, as it helps us with these sessions. So thank you again for attending today's education session, and have a great day, everyone.